everybody. Welcome to another episode of the House of Ways and Means. I'm Ways and this is Means, and we are going to continue our series on student loan repayment. So today we're going to be talking about refinancing. So can you tell me a little bit about refinancing?
So when you want to refinance your student debt, what you're going to be trying to do is hopefully find a lender who will discharge your current debt by paying it off and then issuing you a new loan in the same amount, but hopefully with a lower interest rate. And honestly, it doesn't really make sense to refinance if you can't get a lower interest rate.
Exactly. Okay, so what are the reasons outside of maybe interest rate difference would be a good indicator of why you should refinance?
Well, I think the lower interest rate is really the main thing. Obviously, two loans, the one with the lower interest rate, all else equal, you're going to pay less in interest over the life of the loan, which is more money in your pocket to discharge that debt. Now, you may find yourself in a situation where at the time that you took out your student debt, maybe you had no credit at all, or you didn't have great credit. Perhaps you refinanced and you have a cosigner who is your parent or something, and maybe you want to now get their name off of it and just put the name thing fully in your name, because maybe you have a good job now. Your credit profile is improved because you have a better ability to repay because you have income now, a good income, or maybe you've just improved your credit over the years, gotten some of the negative things off of it from your past, and you just have a better credit score now, and you're just in a better position to get a better interest rate. So, some of those things are the right reasons. Now, obviously, the prevailing interest rates, whatever they are in the market at the current point in time, they may present an opportunity where you can get lower interest rates.
Okay. So tell us a little bit about your experience in particular about going about refinancing. Like, how did that work for you? What did it look like? What were your reasons? Things like that.
Well, this is a little general background. Maybe over the last decade or so, the federal government got really involved in the student loan market they took away a lot of the subsidies they were given to private lenders, such as Bank of America, Chase Bank, what have you. And they stopped subsidizing them to offer student loans to students. So what happened is a lot of those different banks and big banks and lenders, they came out of the market all completely. So the federal government became really the only show in town when it came to getting student debt. But they, once they forced everybody out, they ended up kind of hiking up the interest rates a little bit to a point where they were not really great. So for me, I had about 3 federal student loans, and at the highest level, I had what was called a Grad Plus loan. And they may still use that name, but it was nearly 8% for probably the largest part of my loan. So like I said, I had 3 loans. And I carried that debt for years. I just tried to pay it off as I could. But I always felt like, man, there's got to be a better way. I have pretty good credit. I should be able to get a lower loan, a lower interest rate. So what happened is, time passed, the economy got a little better, and you saw some of these other lenders coming back in to offer student loans again. Maybe not Bank of America or JP Morgan as you may have in the past, even though I'm sure they were out there. But then you might hear some of these companies like SoFi is a familiar name, Earnest, Prosper. The company I went with was CommonBond because at the time they offered me the lowest loan rate. But they had 2 options: floating rate and fixed rate. So we went with the floating rate, and the floating rate that they use is it's indexed off of the 1-month LIBOR. And so that's just a fancy name or a specific name for what banks charge each other to lend. So if a bank lends money to another bank, that's what they're going to be charging. So the 1-month LIBOR rate is the index, and then depending on your credit, you have a margin that's based off of whatever the 1-month LIBOR is. So I think when I struck my loan in 2016, my rate was at about 2.64, I think, and that had some other concessions in it. But I thought, compared to my weighted average interest rate, which was way higher, I thought that was a great loan. And we also did a shorter period, maybe 5 years, I think, because that got us further concessions, and we knew that, hey, we're going to try to pay this off in a short period of time.
Right.
So I wasn't worried about interest rates slowly rising on the floating rate to where we would ever come close to the fixed, eclipsing what the fixed rate was at the time.
Okay. And I know other things that we did in our marriage as far as helping with the student loan or trying to figure out what we were going to do with our student loan debt and repaying it off was that we consolidated loans as well. So can you speak a little bit on consolidation and the purpose of it, why it's even important?
Yeah, so there's refinancing and then there's consolidation. So a lot of times you end up with doing both at the same time, but consolidation is, like I said, I had 3 loans, and a lot of people who have loans have multiple loans, where maybe you had some federal loans, you had some private loans, doing whatever you can to kind of get the amount that you need to be in school. So consolidation is being able to get those 3 loans that I had down to 1 loan. Because it can be annoying having to go to different websites for different lenders to make your payment every month, and it can be a headache, especially if you forget to do it all together. So what happened is CommonBond, who I went with, they allowed me to get those 3 loans down to 1 loan. Now, at the same time, they also did the refinance that I spoke about earlier. But what happens is, if you're looking to consolidate, you have to be careful. Federal government offers consolidation. A lot of different lenders offer consolidation, but you really have to focus on the interest rate. What I've seen a lot of times is that they'll take your highest interest rate for your however many loans you have, and then they'll add another, say, 0.25% on top of that, and they'll make that the rate for consolidating all your loans into one. So it's great to have convenience. Like I said before, it's better to go to one place to make your payment every month rather than 3-4 websites. But you got to think about what is your convenience worth. You don't want to be taking a higher interest rate and then paying more in the long run for your convenience. At least I don't. So, I went with them after they offered me that really low rate. Now, if you watched our video a couple weeks ago, we talked about how you can determine what your weighted average interest rate is. We had a spreadsheet that's built in that calculation if you enter what your loan amounts are and your interest rates, and it can show that for you. So, we'll put the link in that just in case. That was video number 2. I think this is number 4 of the series. Yeah. But I think my weighted interest rate at the time was about somewhere over 6%. So to get something that was more along the lines of the high 2s was great.
Okay. Well, it sounds like you did a really good job of wrapping up, refinancing and consolidating our student loan debt. Is there anything else that I may not have asked that you think is important to make a note of?
Well, let me talk a little more specifically about my experience with CommonBond. So CommonBond, like I said, is a competitor to SoFi, Prosper, Earnest, some of those other companies you may have heard about. But what they did that I really liked, besides just having the lowest interest rate for me at the time, was, it was a really easy experience. Application process was simple. You can finish it in under an hour if you have all your materials ready, which I did because I was kind of looking around at the time. Also, when you reach out to them, their customer service is really good. When I emailed them, they got back to me in quick fashion, but it wasn't like one of those form emails that you get saying that, hey, we got your email, we'll respond to you in 48 hours or whatever. It was just like a person who sent with an email address who actually sent me a response with their name in it. It was really personable experience. Anytime I called them, quick to respond. It was just a good experience. I can't vouch for them enough on that end. Had no problems through the entire process of having the loan given to me, getting the funding, and just the payment process was simple as well. So, and I also have a referral link that I'll put it down in the description. Just to be transparent, there's some financial benefit for our channel if you go through this link and you actually get a refinancing through CommonBond, but that'll be a way to help the channel out. But what happened was, only I refinanced, right? You didn't refinance. And so once I got that lower rate, she then had the higher interest rate. So what we did was we like the avalanche method, as we've talked about. So we just paid the minimum payment on my loan for the first little bit, and we just hit yours with everything we had, and once we got that paid off, then we just finished paying mine off. But I mean, yeah, it was a real smooth process. So I mean, for anybody out there thinking about refinance and consolidation, obviously there's a few things to think about, but it's a great arsenal and a tool to have when you're trying to pay your debt off and do it in a fast fashion. Another thing I want to note is, there's always some cons when it comes to going in for a private lender versus federal. So when you think about if you have subsidized or unsubsidized federal loans, they do have something that's really great called the death benefit, where in the event that the person, God forbid, the person who the loan was taken out for passes away, that loan is discharged immediately. You're not going to find that for a lot of private lenders. So the benefit of having that is, say you had a cosigner, say it was your parents, say it was your spouse, whatever. If that person passes away, then the other person is not left having to deal with that loan.
Yeah, so it's not on their neck to have to complete that in addition to having to deal with the actual passing of the person.
Yeah.
I mean, it's a bit morbid to talk about, but it's really good to have that benefit.
Yeah, so that's something you need to consider. Also, how whatever lender you go with, how they handle forbearance, how they handle if you go back to school and you need your loans in deferment. Everybody handles these things differently. I mean, I have nothing but positive things to say about CommonBond though.
Okay. And just to wrap it up, what are some key takeaways that you would like to leave for the viewers?
Go back to video 2 in this series. Download that spreadsheet if you haven't yet, and you can find out what your weighted average interest rate is. Then you can kind of see what's out there available for you to get right now. Now, one good thing and one important thing, you may have heard that the current administration, Donald Trump, he's really been pushing on and leaning on the Fed to lower interest rates again. Now, whether or not that's a good idea is outside of the scope of this video and outside of the scope of this channel, but that's what's happening right now. So if you're paying attention, if interest rates get cut, then you have a better opportunity to get lower student debt, lower mortgage rates. Everything becomes lower when the general interest rates get cut. So
that would be a good time to refinance.
Yeah, and that's probably coming at the Fed's next meeting at the end of this month. I think the market is pretty much pricing in that it's a guarantee that they're going to cut it a little bit. So stay tuned on that if you're looking to refinance. But that would make it a really good time. Just make sure you can compare, find out if you can get a better rate than what you currently have. And then, just always, like I said, look at the fine print. And, any questions you guys have, of course, send them our way.
All right, well, that's it. Thank you for providing all the information that we needed. It's definitely beneficial. And then, like he said, if there are any questions, any comments, don't forget to drop it down below. And don't forget to give us a thumbs up if you like our video. Thank you so much for watching. Take care.